Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 20th of August. Starting off with the FTSE 100, which seems to be, or hopefully is in a bull flag there, a mid-move consolidation after the bear trap rebound from the beginning of the month. Hopefully the price action will stay above 82.80 or so, which is recent support. Worst case is that we've got to test the floor of that rising trend channel from last September and the 50-day line at around 82.08, but ideally we get away with a bounce towards 82.80, ideally even above 8300, and then head higher through the 8400 level. In terms of what the upside could be if we get through 8400 at the moment, best case is up to 8800 by the end of next month, which seems rather unlikely, but we have done that kind of thing in terms of the rally that we had from February to May, so maybe there will be a repeat. Moving on to the DAX, and here we are reminded, as I said, I think yesterday, that it's been a very volatile month so far. What we don't want to see is a flip to the downside, but at the moment the market approaching that resistance line there from back in May at 18,500. Above that, on an end of day close basis, we could be looking at the top of that rising trend channel from back in September as high as 20,000 by the end of next month. Ideally we stay above the 50-day line, 18,200, or at a stretch down towards the April support line projection. It's currently around 17,500, but it would be a win if we can stay above that 50-day line. The Dow is next, and here the picture is one of, or has been one of, recovery from the original rug pull that we had back at the beginning of the month. Bear trap island reversal, so gapping down at the beginning of the month and gapping up just in the last week. We want to see this break, this market break that July resistance line at 41,000, and for this market to head up to 42,500 at the top of that rising trend channel from this time last year. Ideally we stay on the right side of 40,000 and the floor of that gap, and the 50-day line currently at around 39,600. Next on the list is Bitcoin, and here it's clearly been something of a struggle in the recent past, but we're struggling in the right place. The floor of that rising trend channel from back in October. Floor of the channel there currently around at its support line around 60,000. The longer we stay above that, the greater the chance of a move up to 70,000, and that rather pesky March resistance line, which basically holds the key to the whole potential move to the upside here. If we can get through that by the end of, well, I suppose by the end of this month is possible, then there could be a move to the top of the rising trend channel from October last year, as high as 90,000. Obviously, those time frames could slip. What is positive, at least in terms of today, is the way that the RSI is now back above 50. We've had 3 or 4 failures at or below 50. And we've still got a sharply rising 200-day moving average around 62,800. So that can and should hopefully drag this market higher. If we do break down, not looking for anything worse than that February support line projection around 52,000. Star of the show by some distance in the recent past has been gold, and here we're approaching the 2550 area. We were looking for 2600 by the end of this month. Looks like we could get up to 2620, which is the top of that rising December trend channel, at least its resistance line projection. So that looks as though hopefully we will get. And in terms of the downside, not looking for anything lower now than 2480, which is recent swing low support. Moving on to the stocks, and quite a collection today. Atome is the first one on the list, and here you can see that the shares managed to gap through the 200-day moving average. We had a golden cross earlier this month, and we've obviously well exceeded our initial target there, the top of that rising trend channel base around 72 pence. Final target here in the near term up to the red resistance line there, resistance line projection from November as high as 96 pence, and we're looking for that by the end of next month, the longer we stay above the 75 pence area. Onto a stock where I'm delighted to say that the shares have bounced quite nicely after being classed as a sell or a short, obviously near the bottom as it was. Here we've had bear trap island reversal, so bear trap rebound from below the December support there, around £1.47, and then gapping up twice in the last week That suggests that we should have enough gas in the tank here to at least fill that gap down there from back in July up towards £1.82, even if the shares fall back again. Ideally, there's no end-of-day close back below the latest gap there, around £1.58. The stock which so far not attracted any bearish attention, in fact quite the opposite, is Beeks. Here another positive RNS today. Top of the price channel there, heading for as high as 335 pence, looking for that by the end of next month, while there's no end of day close. Back below the latest gap for the shares around the 260 pence level, so above 260, looking for 335 on Beeks by the end of next month. Very pleased with the next call here, or the next charting call here in terms of Corcel. We were looking for the shares, well, we were thinking that the shares were in a broadening triangle base, and the top of the triangle there heading for 0.2 pence. So far the high has been around 0.19, and in terms of that we're looking for hopefully getting 0.2 pence over the next week or so. Upside value while we hold above the old peak there from back in July around 0.16, above 0.16, looking for 0.2 on Corcel. One would have expected gold stocks, especially the small ones, to be flying at the moment, but they're already slowly pushing higher. That's obviously the beauty of the London market. Golden Prospect, a good example here. Rising trend channel there from December, top of the channel there heading for 44 pence. We're looking for that by the end of next month, especially given the rebound off the floor of that rising trend channel and the 50-day moving average around 33 pence. The longer we stay above that, the greater the chance of a decent push to the upside. Decent news from Helix, and decent reaction in terms of the initial spike or gap higher that we had today. Looking for the shares to, as I said, I think yesterday, above 20 pence, look for 32 pence by the end of next month. And the more time we can spend above that 50-day line, just above current levels, the better the look for the stock. We've also got the RSI above neutral 50 at 54, so that is a positive for the price action. On to Helium 1, and staying with the Helium. Here we've got what I'm rather surprised by, which is a break of both the 50-day, both the 200-day moving average and the 1.5 pence resistance area. I want to see an end-of-day close above both 1.5 and especially the 200-day moving average to give us the chance of a move as high as 2.5 pence by the end of next month. You can see if you look back that we haven't been above the 200-day line on a sustained basis basically since this time last year. So quite a coup for the bulls of that stock to get the shares approaching that 200-day line. Upside valid while we're above 1.4, I think, which is recent support for the shares, and heading then for hopefully 2.5 pence. Worth giving i3 Energy a mention. I think it was treated rather unfairly by the market. The latest bid there around 13.9 pence equivalent, and the shares finally gapping up and doing what we were hoping they would do over recent months. The situation there obviously is that the shares were much higher at 20 pence, 30 pence plus only a year or two ago, and therefore the deal, although it's logical, is perhaps rather disappointing for some in the market. Moving along to Mast, which looks like a decent recovery situation. I think new management and new approach to life. Here you can see that we've got the shares hitting, well, they previously hit our initial target there, the broadening triangle base there around 0.22, and above 0.22 looking for the stock date as high as 0.3 by the end of next month. Main thing here is that we stay above the 50-day moving average at 0.15, whatever happens. Wanted to cover Novacyt after the recent 1 week rally that the shares have had. Pull back today, but what will be interesting is whether or where the shares will find support, ideally above the 80 to 85 pence area, which was resistance basically on the way down. See that back in this time last year, etc. So barring an end of day close below 80 pence, we're still looking for a retest of the best levels that we've had, 120, 130, which was and is the post-2023 resistance for the shares. You can see that from the beginning of last year. On to Neo Energy as well, which has cooled off slightly after its big push to the upside. But what's interesting here is that we've got some support coming in between 0.75 or 0.75 to 0.8, which was resistance on the way down above 0.8, especially looking for the shares to flip up to 1.2 or even 1.25 pence, the IPO price from back in the autumn. So maybe at these levels it's a decent risk reward. On to N4 Pharma, and here the situation is that a bit of a messy chart, but we've got rising 50-day line, and we've got the prospect of the shares at least heading up to the 200-day moving average at 0.72 in the way that they did back in December, just touching it and then coming back. But the key here, staying above that 50-day line at 0.5. Moving on to the last two, and starting off with the situation at Shaw Ventures, which is not a stock that many people look at. Here you can see that we've got a mid-move consolidation for the shares, and looking for the stock to head higher within a broadening triangle, which has been in place since well, basically the last 5 years. That's heading for £1.25, and we're looking for that while we hold above the 50-day line and the recent golden cross between the 50-day line and 200-day lines at 85 pence. Finishing off with the stock which I haven't covered very much in the recent past, which is Savannah. Here you can see that we've got a rising trend channel there from November. Quite a strong formation there, top of the channel there, heading for 6 pence, which we're looking for over the next 1 to 2 months, and looking for that while we remain above the floor of the channel at 3.5 pence. That's it for me today. More updates tomorrow.